Home prices in Spring Hill are starting to shift, listings are sitting longer, and price drops are becoming more and more common. So the big question everyone's asking right now, are we heading towards a market crash? And the answer might surprise you because depending on what you do next, this market could either save you a lot of money or cost you a lot of money. And by the way, this is not one of those videos where I just tell you it depends. I'm going to give you exactly what's going on in Spring Hill right now. Let's start with the actual data because the headlines don't give you the full story. The median sales price in Spring Hill right now is $333,000. Back in 2021, it was around $210,000, so we've seen a pretty significant run up over the last few years. And here's where things are starting to change a little bit compared to that 2021 to 2023 market. Median time to contract is 72 days. Active inventory is at 1,502 homes, and we're seeing more price reductions than we did a few years back, and even compared to last year. All of this tells us one thing, that buyers are not rushing to get into a home like they were in 2021 to 2023. But here's the part that most people are getting wrong, and also where the crash talk starts. When people see prices leveling off, homes sitting longer, and interest rates still elevated, it feels like the market is about to drop hard. And honestly, I get why people think that. If you were buying or selling in 21 or 22, it feels like a completely different market. But here's the reality. A housing crash doesn't happen because homes sit a little bit longer or prices soften a bit. A real crash requires things like massive job loss, a spike in foreclosures, and homeowners being forced to sell. And right now, we're just not seeing that. I have heard of people that are selling because property taxes or homeowners insurance have gone up, but it's not something that I've seen consistently. Most homeowners in Spring Hill have a ton of equity and are locked in at a pretty low interest rate. So instead of panic selling, they're just choosing not to sell.
So if we jump to Sunstats, we'll see that in January 2021, the median sale price for Hernando County was 210,000, and now it is currently 333,000. You'll see this large spike from 2021 to 2022, June 2022. So over that year and a half, a pretty significant increase in the median sales price. That's when you saw a bunch of people moving here post-COVID. Um, and it was pretty much just crazy. Everything you listed was getting 20 offers. Homes were selling within 24 hours. It was just nuts. And then since then, you've seen like a steady, just bob and weave up and down, roughly around 330,000 for the median sale price. So we haven't seen anything crazy in the last 4 years. We've kind of just been moving sideways. Taking a look at median time to contract, back in January 2021, it was 13 days, and now we're sitting at 72 days, as I previously mentioned. You could see this long stretch here from 2021 to roughly July 2022, where the median time to contract sat between like 6 and 11 days, maybe even five and 11 days, which is just absolutely crazy. It just shows you the influx of people that we had moving here, and interest rates were at all-time lows. Now we're in a healthier market where, it's 72 days on market. Buyers don't have to rush to make an offer on a home. They can make a more, you know, thoughtful decision. And interest rates are, around 6.5%, I believe. So it's definitely more balanced. There's less buyers in the market and more listings currently, which is, works to your advantage. And we'll talk about what sellers can do to kind of combat that later in this video. But yeah, time to contract obviously spiked up, and I think it's actually healthier for the market. And the main reason that is because of active inventory. There was 430 homes on market in Hernando County in January 2021, with the lowest point looking like 287. So not many homes, and that's why you saw the spike in days on market, or not the spike, I guess the decrease in average days on market before a contract, and why you saw prices going up because inventory was at an all-time low. Now we're sitting at roughly 2,100 and back to, I think it's 1,500. I think this is weird. 600 listings just popped up out of nowhere. So that might be a mistake, but as of February 2026, there is 1,500 active listings. So pretty much triple, a little bit over triple the amount of listings, which is why you see time on market increase and also why you see the month supply of inventory increase. We're currently sitting at 4.3 months of inventory, and Back in 2021, we were at 1.2, so it would have taken 1.2 months for all the homes on market to sell if nothing else was listed. At the very bottom of this, we're roughly 0.7, so not even a month and everything would have been sold at this time because of how many sales were happening monthly and how many new homes were being listed monthly, or the current inventory was that month. I hope that makes sense, but essentially what you want to see is this number here. Somewhere around 5 months of inventory is a healthy market. It's a balanced market, and that's currently what we're seeing right now.
Spring Hill is also in a unique position compared to other parts of the Tampa Bay area. It's still one of the most affordable places near Tampa, and you get the most for your money here. We're still seeing people move from out of state, not like we did post-COVID, but I'm still getting calls from you guys to move to Florida. And while there's a lot of new construction going on in Spring Hill, I don't believe we're in a phase of overbuilding. New construction is creating more competition, which is driving prices down a little bit or making homes sit on market a little bit longer, but that's not the same thing as a crash. If you're a buyer, this is actually one of the best setups we've seen in a while. You have more negotiating power, you're not competing with 12 other offers, and you can actually take your time and make a smart decision. In my opinion, the buyers that take action in this market are the ones that end up on top because they have time to act rationally and actually get a good deal in this current market. Now, if you're a seller, this is where pricing strategy really matters. You can't price your home like it's 2022 anymore. Homes that are priced well and show well are still selling pretty quick, but overpriced homes, they sit and end up taking price drops anyway. The market has not crashed and is not crashing, but the days of unrealistic list prices are over. Now, we answered the question on the current market conditions, but the real question is, could a market crash happen? And I don't have a crystal ball, so I can't give you a yes or no answer, but I can tell you what would be needed in order for a market crash to happen. The recipe for a market crash include a major recession, significant job losses, a spike in foreclosures, or a huge oversupply of homes. And as of right now in this current market, those conditions are just not there. So my final verdict on is the Spring Hill market crashing is no, but there is a shift happening. And how you move and make decisions in this market matters more than ever. If you're thinking about making a move to Spring Hill or the Tampa Bay area in general, you can reach me directly using the contact information in the description below. You can also get a copy of my free Hernando County moving guide, which is also linked in the description below. I'm always open to having conversations about what you're looking for and what the market looks like in your price range, so reach out anytime, and I'll see you in the next video.